Vincenzo's Gold Crypto Investing this May the 20th, 2025, noontime cryptocurrency blockchain technology update. You can see the gold and silver market is rebounding quite nicely after a sell-off week. Pretty much the entire week last week. You can see the gold bullion is up to $3,200 an ounce, almost back to $3,300. Silver's almost back to $33. B2 Gold's $315. Kinross is back to $14.24. First Majestic almost $6. Fortuna almost $6. Pan America Silver back to 23.5. Rivian has been quietly sneaking and pushing up the last month and a half as they get closer and closer to breaking even on earnings. They're up 47% in this last month. They're up 21% in the last 3 months. They're up 68.56% in the last 6 months, and they are up 62.42% in the last year. So they have been building a base the last couple of years. They're getting closer and closer to breaking even on earnings, which is what I've been playing. I have over 300 shares of them. Bought them all. I'm up on the position over 20% now because I've been buying since it got below $16, below $10 is when I've been buying. But if we look at the Bitcoin price now, as there's been a lot of volatility this week, and we did have a volatility warning this week, and you can see already in just a short week so far, you can see Sunday we pumped up. Look at this volatility, and that's why we had the warning up. The Bitcoin price, 3.67% on Sunday. Then Sunday night and the Monday, it went down 4.85%. And then Monday night and Tuesday, now today, it rose back up as high as 4.63%. So we're having very volatile swings. The market is trying to figure out where it wants to go. Is it coming back down to 97,000 for a retest of major underneath support? Or is it going to pump up to 119,286.47 new all-time high? The market's trying to figure it out. So there's hence high volatility. And that's why we gave you with that first mover advantage and the education, information, and trust that you need. That we were going to have a volatile week. You can see the moving average is now the 50 days almost up to the 97,000. The 200 days almost up to the 90,000. And the Bitcoin price continues to pump to the upside. And you can see where we got going on here, where we get this price target from. If this does break to the upside, you could say this was your rounding bottom, right? You could see this is where you have a critical neckline support to the point of a breakout. And that's what gets us up there at $119,000. Yes, I still believe this will break to the downside, but I do not know that because I cannot predict the future. I can only go, and I'm still laying out, and I'm still going with the technical analysis and the thesis in what I thought was going to play out this year until it is invalidated completely. It has not been invalidated yet. We've been in this rising wedge bullish reversal off that double bottom, off that 90 or off that 74,000 a couple of weeks ago right there. Something that we were calling that we would hit ever since we were way up here over $100,000. So that was a very bold call. Nobody else was making that call, but we decided to make that call based on what we were seeing in the market. And that's what we're still watching to see if this does eventually break to the downside. And if it does not breach and break a new high at 109,401 and change, if it doesn't take out this old high from back there, I believe in January, this would be a prototypical bull trap where then over the next 2 weeks, you have a major fall all the way back down to the $74,000 and change. And with that would cause a lot of chaos in the altcoins, right? So that's something that we're watching very, very closely. Bitcoin dominance has had another little rise the last several days now after you had this initial fall, which allowed altcoins to explode for about a 10 to 14 day period as you had a consolidation from 66% dominance all the way down to about the 61.5% dominance. But the last couple of days, you've had that little brief rally, which has allowed for some selling in the altcoins, right? You can see the Ethereum price is still in the same area that it's been in. We're still sitting on top of and along the 200-day moving average, as long as we can stay above the 200-day moving average, but especially the 50-day moving average. That's only a few days away now from having a bullish cross where the 50 is going to get on top of the 100-day moving average. But as long as you can stay on top of the 50-day moving average, especially if you're on top of the 200, you're bullish, and you can still get sent up here to the $3,050.11, or the bottom part of that green trading zone, right? And that's what we're watching. We had that beautiful call from right here, how you would fight and claw and get over the moving averages to start. That's where that initial 16% pump came. And then you can see you had that wick rejection off the 100-day moving average initially, built the base and pumped up, and now you're holding support along the 200-day moving average. So that's what we're going to watch out for. Obviously, your major underneath support and your critical support to keep this current pattern going is the $1,809, or the top part of this green trading zone. If we go look at the XLM, it's in the same spot it was in yesterday. You can see we did have a freshly minted last week bullish cross where the 50 got over the 100, or over the 200. It's still below the 100. The price is consolidated back down like we thought it would off this local push top, and now it's sitting just along and above the 50-day moving average, wicking off the 200-day moving average at 28.8 cents. And these are the areas you need to hold. You have to hold the moving averages right here that you're trying to hold. And if you can hold these, you can have another pump to the upside like this. And the next pump would look something like this, right? You would just still don't want to buy you. We don't care. You would go like this from swing high to swing low off the support. And your next leg on the pump, if you pump to the upside, would get you up here to this critical resistance level that was holding as critical support back before we had our big consolidation flush down there at about just below the 43 cents, up there at about the 40 to 41 and a half cent level, right? But if it breaks to the downside and breaches the 50-day moving average, you would come immediately down here for a major retest of the pattern support at 25 and a half cents. The same thing with the XRP. We've been diagnosed and sniffing out and first mover advantaging this. Members of Jabroni Killers have been on top of this ever since back here in early to mid-January, where that purple circle was. We drew out this yellow pattern. We've wicked down as low as $1.61. We have that neckline support at 209. We bounced off it. We hit the rejection level that we were looking for after we had the bullish cross, came back down and is retesting the bullish cross support where the 50 got over the 100-day moving average. If we can hold where we're at now, you can make another run at the 255 level. But if we slip for any reason, the 50 and the 100 right there, you're immediately coming down to the $2.09 neckline support. And that's a critical support for this price, because I still believe until I'm broken out the otherwise that we have to come down and hit that. It's a technical level off a pattern. That doesn't mean I have to be right, but it's led us to this point so far, so we're not throwing in the towel. The same thing with AMP. You can see it's still sitting down there on a major support level, that it's just off the 50-day moving average, just over the 50-day moving average, just below the 100-day moving average, and it's sitting there in a consolidation trying to hold it, because if it can hold it and pump up to the upside, your next move on a pump to the upside is going to be all the way up here at the 0.00665 level. This is where your next pump would come up before you would have any kind of rejection, and that's what we're looking for with the AMP, because we've been on this falling wedge for quite some time, our falling channel, and it's a bearish continuation pattern, but they usually break out and have a technical target near the top of the pattern after they break out the opposite way. That's what we're still playing and seeing if that does happen. We've had as much as a 93% swing bottom, swing low to current wick high that happened last week. Now we're trying to have another leg to the upside, because this is what AMP does. It pumps, consolidates, pumps, consolidates, pumps, consolidates, and they do them all in big wicks, right? So it's very frustrating, and it's a very patient man's game to try to trade low XTC action, to try to trade the AMP. You can see the moving averages are slowly converging in the same as they are in all of them, because there's about to be a big move in all of these coins. You can see the big move here would be a breakdown to the downside, and you would come and fulfill this technical target very quickly in XDC at 0.04. On the contrary, if this breaks bullish off, you can see the moving average is getting tight that lets you know there's a big move about to happen in the daily time frame, and that's going on in most of these coins. A big pump to the upside in a breakout would bring you all the way up here on a massive rally up near 10 cents, right? So that's something that we're looking at. This was a noontime update. We'll have another update earlier this evening because I don't believe I will be doing my second job today, so I'll be going straight home from my primary job. Peace and love. Overcast, gloomy, very chilly late spring just north of downtown Detroit of 43 degrees. Correction, 48 degrees. Jay. From just north of downtown Detroit inside the mobile compound in the great state of Michigan. Peace and love. The Rex Eyebrow. Jay.